Hello everyone, welcome back to a new module on venture capital financing. So in this particular module, we will be discussing about the concept of venture capital, the various importance, the scope and the features of venture capital financing, and what are the stages of venture capital financing. Also, we will look into the venture capital process and the structure, and also the venture capital financing in India in this particular module. So, to begin with the concept or the idea behind the meaning of a venture capital, venture capital financing was emerged during the 1950s in the United States. So, the birth of venture capital is in the United States in the 1950s. The Harvard Business School professor Georges Doriot is generally considered as the father of venture capital. So these are the common things or the common ideas that we should have while we discuss about venture capital financing. Okay. So basically, this venture capital financing is in the form of an equity financing. Okay, so this is particularly designed for funding the high risk and high reward projects. So this is an investment for funding high risk and high reward projects. So suppose I'm deciding to or I'm planning to start a new venture by myself and two of my friends. So when we plan about that, the first thing that we should have in our hand is the capital to start that particular venture or business or even startups. Okay, so at times I can go and approach different types of financing to raise fund or to raise capital for my particular business or venture. Okay, so I decided to approach a venture capitalist who is an investor who has money in their hands and who is ready to invest in a high risk and high reward projects. So once my project or my project proposal is presented before them, and once they become convinced about this particular business project, and once they see that in the coming future there is a growth prospect for this particular project, they will decide to finance my particular business, to provide me with finance. So, according to them, according to these investors or these venture capitalists, it is a very risky job. That means I have not started my business and we are not sure about the returns or the success of the business in the coming years or coming future. So the risk that is taken by that particular investor is very high. So we have already learned that when risk is high, there is a chance of high reward. They are directly proportional. So these venture capitalists or the particular investors come forward with the funding in the high risk and high reward projects. So their main aim or the ultimate aim or the ultimate objective is to earn high rate of return from this investment. So according to them, it is like an investment. Okay. So venture capital funds or VCFs act as a financial intermediary between the investors and the entrepreneurs. So the investors are looking for high potential returns and they have money in their hand, they are ready to invest anywhere, but provided they they can have high potential returns. And on the other side, we have the entrepreneurs who are in searching of capital to start their business. Okay, so this venture capital financing, this particular form of financing act as a financial intermediary between the investors and the entrepreneurs. Okay, so those who have money and those who are in need of money. Okay, so this venture capital concept is also combined with, along with providing fund, it is also combined with some value addition that can be in the form of management advice, or marketing expertise and contribution to overall strategy. So, in addition to what is provided in the form of monetary terms, some value addition services like management advices are also given by this venture capitalist. Okay, so we can call this venture capitalist as angel investors also, of which we will discuss in the coming slides. Okay. I think you got an idea about the concept or the meaning of venture capitalist or venture capital financing. So remember that this venture capital financing is happening only for a new business, okay, or for a new venture which is innovative in nature and which has got a growth prospects in the future, or which is growth oriented in towards the future. Okay, venture capital means the capital required by an entrepreneur to venture into something new or something promising and unconventional. That means it should be innovative. Financial investment. So, venture capital financing is a financial investment in a highly risk oriented venture with the objective of earning a high rate of return. So, these two are the important terms that should come to your mind while thinking about venture capital financing. One is highly risk oriented venture, and second is earning high rate of return. And also, another two words, that is something new and something innovative. So these four terms should be kept in our mind while we are discussing about venture capital financing. Okay. So venture capital funds or venture capital financing provides funds for a period of about 10 years and investing in venture capital undertakings for 3 to 5 years expecting high returns. So this is a process. This can be a medium term or a long term process where the funds are pooled, and that is pooled for a particular period of about 10 years, and after pooling this is invested in the venture capital undertakings for 3 to 5 years of period, and they are expecting a high rate of return. Okay. So, venture capital funds act as financial intermediary between entrepreneurs and investors. So, I hope this concept is clear to you. So, when you hear about venture capital financing, uh, please take a note of these four terms, that is something new, something innovative, then highly risk oriented venture, and a high rate of return for the investors or the venture capitalist. Okay, so let's see the definition given by SEBI, Securities and Exchange Board of India, Venture Capital Funds Regulations Act 1996. According to this, it defines venture capital funds as a fund established in the form of a trust or a company having a dedicated pool of capital which raises money through loan, donations, issue of securities or units, as the case may be, and makes or purposes to make investments in accordance with these regulations. So remember that in case of venture capital financing, mainly it is equity financing. Equity financing is the prominent one in venture capital financing. Okay. So, according to the European Venture Capital Association, they describe this venture capital financing as a risk finance which helps in the entrepreneurial growth oriented companies. Okay. So, entrepreneurial growth oriented companies are helped through this venture capital financing, and it is a partnership between the entrepreneur in which the investor can add value to the company, of which we have already discussed the value addition service like management advice, then expert advice. They may be expert in a particular field of operation. Okay, so they can provide expert advice also. So let's see an example in the case of venture capital financing. So here I have taken the example of pepperfry.com. So pepperfry.com is the online furniture shopping in India. It provides online furniture shopping in India, and it includes the home decor or the furnishings and all the homewares And in this case, the pepperfry.com has gone for a venture capital financing. So let's see what was it all about. Okay, so pepperfry.com, India's largest furniture e-marketplace, has raised USD 100 million in a fresh round of funding led by Goldman Sachs and Zodius Technology Fund. So they started the business by raising 100 million US dollars with the help of, or the funding was done by Goldman Sachs and the Zodius Technology Fund. Pepperfry will use the funds to expand its footprint in Tier 3 and 4 cities by adding to its growing fleet of delivery vehicles. Okay. So it will also open new distribution centers and expand its carpenter and assembly service network. So they started with one particular operation, and they quickly or gradually they expanded their operations into different fields. So they opened new distribution centers, and they expanded their carpenter service network as well as the assembly service network. So this is the largest quantum of investment raised by a sector focused e-commerce player in India. So Pepperfry is an online furniture shopping website providing different types of varieties and products. Okay, so this particular website has gone for e-commerce sales, and it is one of the prominent e-commerce seller in the field of selling of furniture. Okay, so this is the case of pepperfry.com where they went for venture capital financing. So I hope this particular concept is clear to you. Remember that it is venture capital financing always act as a financial intermediary between the investors as well as the entrepreneurs. So this venture capital financing is taking place in different stages. So in all the stage, they will provide, or they will give a particular sum of money step by step. So about that we will discuss in the stages of venture capital financing. Okay, thank you.